As 2023 winds down to a close, our attention as investors turns to the coming year. What investment vehicles, in which sectors, are going to serve us best in 2024? While none of us have a crystal ball that will reliably show us the future, we can all use some common sense and careful planning to head into the new year with confidence. In this article, one will explore 4 index exchange-traded funds you may want to consider when researching S&P 500-driven approaches. You can't invest directly in the S&P 500 or any other index. So instead, you can access the collection of stocks in an index by buying an exchange-traded fund, ETF. An index fund is simply an investment vehicle that tracks an index. While index funds are available in both mutual fund and exchange-traded fund form, this article will focus on ETFs. The main difference between mutual funds and ETFs is that mutual funds are traded based on the price set at the end of the day, and ETFs can be bought and sold throughout the day, like stocks can. The S&P 500 index is cap-weighted, as are the majority of the funds that track it, which means that the amount of each holding is based on the size of the stock. Following years in which technology stocks have dominated stock market performance, S&P index funds are heavily weighted towards that sector. The S&P 500 index measures the performance of the top 500 companies in the U.S. by value. S&P 500 index funds are investment funds that invest in the 500 companies of the S&P 500 or a subset of those companies. The S&P 500 is one of the best representations of the stock market in the U.S. as a whole. The stock market has experienced many downturns over the years, but, unlike individual companies, the entire stock market does recover from recessions and crashes. Since the S&P 500 companies account for 80% of the U.S. stock market, investing in an index fund based on this is generally seen as a proxy for investing in the full U.S. stock market. Of course, this also means that while your investment will perform no worse than the S&P, it will also perform no better. Investing in stocks is one of the best moves you can make to grow your wealth. Take a close look at the stocks recommended by the Forbes investment team in this exclusive report, Best Stocks to Buy for 2024. There are many ETFs that use the S&P 500 index or some derivation of it as a baseline for the holdings within the fund. I've chosen 4 ETFs for this article. For more, see how to build an index fund portfolio for income. SPY is the first ever US ETF, and the most popular. Established in January 1993, SPY has been traded on the market for 30 years. The ETF's assets grew from $6.8 million to more than $1 billion in the first 3 years and are now more than 400 times the latter amount. SPY has remained the gold standard for ETF investors, who use the performance of SPY to compare other stocks or ETFs for risk and return. You can trade this ETF on multiple platforms.